PayPal just got absolutely pummeled after earnings. I mean, take a look at this chart here. You can see it just basically has gone straight down the past few trading days. So how bad was the earnings, and is it time to basically cut your losses with PayPal and just honestly move on from the stock? So let's discuss all that today right after you gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. Oh, and before we get too far, I just released my picks for my dividend portfolio that I'm building out, the exact stocks, the exact price I'm looking at, the exact logic, why I want those stocks in my dividend portfolio, the exact reason why I'm having a dividend portfolio, and all the other details like that. That just got released in my group, so make sure you check out the pinned comment down there. See if a membership's right for you. You get access to me, a stock analyzer tool that's coming completely free, 5 courses for free. You get to see all the buy and sell alerts. So much information in there, guys. Just check out the pinned comment down there. I may have left something special for you if you decide to check it out and just see if it's right for you. All right, so after I went through the earnings call, I went through, actually listened to the physical call, actually went through all the documents, all the releases, everything else. It honestly wasn't that bad of a call, nor that bad of an earnings. They beat on revenue. They met expectations with EPS. Basically, the numbers across the board improved with the exception of margins here. We'll talk about that here in just a second. But guidance was still either maintained or increased just a little bit. Everything was basically positive across the board with the exception of those margins, which they did miss Wall Street's expectation of 22%. I think they had 21.4%, if I remember correctly. But more importantly, when you kind of dove into the margins a little bit further, you actually saw that it was transaction margins that was really holding everything back. So they basically turned around the entire rest of the business, gotten the margins better across the board with the exception of those transaction margins, which they said would be cleared up and back to the positive on Q4 or by the time Q4 happens. So really, when you get into the numbers and you actually see exactly what happened, it's really not that bad. So why the heck did it crater exactly? And are we missing something altogether that a lot of other folks are seeing? And there actually is a good reason to bail completely out of this stock before it gets really ugly. So for me, I saw 3 big reasons why it cratered back down. And more importantly, those reasons are going to tell us if we should sell the stock or if it's just Wall Street being Wall Street and we need to continue right on with our plan. So the first reason why it cratered back down is because it ran up almost 30% before earnings. So nothing short of blowout, incredible, unbelievable earnings was going to send that move higher, going to send the stock up higher. You can't have a stock run up 30% into earnings on nothing. I get it, it was beaten down, really devalued, but it ran up on basically nothing, and expect the stock to just continue to run after a good earnings call, a solid earnings call, but not a spectacular, great blowout out of the water. And definitely, a call that didn't really clear up all the problems that are going on with the company, with the stock, and some of the question marks that are still out there. So for me, when you see that sort of run up ahead of time in the stock, I'm not one to play trading games around earnings. You guys know that. One, I'm not a trader. Two, a stock's never more manipulated. I've seen more ridiculous than this. I've seen a stock run up 80% coming into an earnings, have terrible earnings, and still continue to run afterwards, despite the fact the stock being in the doghouse and everything else. So earnings is wild, unpredictable. Not even going to try to guess or figure any of it out ahead of time or try to trade it or anything else like that. But for me, when I see a 30% run on a stock coming up into earnings, it's a pretty good indicator there that, hey, if it gets beaten back down afterwards, it may not have anything to do with the earnings, but it may have everything to do with that's the way the traders and the option guys and the algos and everybody else have set up the trade after those earnings. So that to me is the first kind of thing right there that I saw with PayPal's earnings and why it got beaten down so far. The second would be the US was downgraded just a few short days before this earnings call came out. So it's basically caught up in a much larger sell-off that's going on right now. And remember, guys, this market has been on a ridiculous tear at the beginning of this year. It needed to cool off. It needed reasons to cool off. And that US downgrade gave them a tangible, solid reason to actually sell off. They've been talking about earnings apocalypse and, super recessions and all that other ridiculous stuff like that. And as soon as that comes, they were going to sell off that rally. But those things never came to fruition. They never actually happened. So this was kind of the first catalyst that they could use to sell off the market and kind of take a breather. And honestly, guys, it's healthy. The market needed this type of a breather. But on the flip side, unfortunately, PayPal got caught up and, basically releasing their earnings right around that time frame. And unfortunately, this is the consequence here. It may, even if they would have had spectacular blow it out of the water earnings, it may have still sold off because that was just the sentiment in the market at the time was the sell-off based upon that downgrade. And third, the stock is going nowhere until we see these 2 things happen. And the first one is that fintech gets completely out of the doghouse. And I mean, all of fintech gets out of the doghouse. And this happens, guys. Sectors go out of favor for months, sometimes years at a time before coming back into favor. And right now, fintech's absolutely out of favor with Wall Street in general. And 2, they need to name that new CEO, and they're at the final stages of that, guys. So it's happening. They said they're at the final stages. Now, what does that mean? They didn't get into specifics here, so it means they've either identified a candidate and they're kind of negotiating, because those big CEO payouts, especially for a company like PayPal, takes time. It's got to go through a lot of lawyers. What kind of management team are they bringing on? Who are they bringing on? Who are they getting rid of? All those sort of things are kind of all worked out ahead of time. So they could be waiting on that, or they could be down to the last, one, two, maybe third candidate there that they're kind of working with and trying to figure out who's the right person to lead this company moving forward. So it is in the final stages, but until that person is named and Wall Street's had time to digest it, and until FinTech gets out of the doghouse, honestly, this stock is not going to make much of a rally. Sure, it was nice seeing that 30% rally, but getting back to where we should be with this stock and at least back to fair valuation is a long ways away, and it's not even going to start a real march up towards that until we see these two things happen. But am I selling the stock? I mean, if I've got to wait on these things, and these things could take months, maybe even longer than that, should I just sell and move my money somewhere else? Well, you honestly could, and if that was part of your plan, great, that makes sense. But it's not part of my plan. Part of my plan is being patient with stock picks when stocks get beaten down. I mean, Apple, Google, Amazon, you name it, you name any company during the greatest bull run, the previous, 12, 13 years or so, those stocks ran, and then they would have periods of time where they went nowhere or actually traded down for 6 months, a year, sometimes longer than that. So if that can happen to those great names and those great companies, it not, to me, out of the realm of possibility that can happen to a stock like PayPal during a down market. So for me, this is just time to continue to stick with my plan. There's nothing here that has me altering my plan personally in regards to this stock. Everything still looks like it's right on track. So I'm going to continue to casually add, as I've been doing this entire time, continuing to build out a larger position than I probably should have in this stock. But again, that's okay for me. I'm okay with that risk tolerance there. For a lot of you guys, you've built out your position. Okay, it's time to move on and be patient with the stock. If your plan is to hold this stock for the next, 5 or 10 years or whatever the case is, whatever your whole time frame is. But for me, my whole time frame is that long time period. And more importantly, as I continue my money loops and as everything else continues to come in, I need places to place that capital. And right now, there's not a lot of better places that I see in the stock market right now for my capital than putting it over in PayPal. So it's going to continue to get that capital. And remember, if you want to see all my stock picks in real time, if you want access to my watch list with price targets, you want to take 5 courses for free, if you want to be able to use that stock analyzer tool completely free for you, guys, it's so close. It's so close I can taste it. If you want to have access to that for free and a ton more, make sure you check out the pinned comment down there and see everything that's included, because a membership may be right for you, and I may have left something special down there for you in the meantime. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.